Hey, this will be a video chart on ENTI, Encounter Technologies Incorporated. I did a static annotated chart on this one yesterday, but it's a pretty interesting chart, and I've had a few people request an actual video, so here we are. Um, Obviously, yesterday was the big day. Volume really poured in. Things kind of started on Monday as this big volume bar came in. The price didn't quite make a movement here, but you could see a nice candle there, and then there was the huge follow through on volume, and the price reacted nicely. This 200-day simple moving average, which is this orange line here, this is kind of being the thorn in the side of the chart right now, and this will be the level that the bulls need to get through. But today was just a nice consolidation day. Maybe if you're a day trader and you bought up at the top, you're a little bummed out. But for those of the people playing the swing trade or a little longer term pattern here, it was a healthy day, and the health comes from just having a nice amount of volume, but not huge volume, much less than the breakout day. So if you watch my videos, I'm sure you've heard me talk about this volume setup, but when you have the big breakout days like this, you want to see just as much volume as possible. But when the price either goes sideways or down, that's where you want to see volume drop off, and that was the case here. Much less volume than what happened yesterday on the big breakout day. So far so good on the consolidation pullback. Now on that same note, we got to make sure and monitor our support levels, because some of them we don't want to see fall, and we really want to see them hold strong, because if they don't, then that's kind of a warning sign that maybe this is just a false move. And right now, the key area of support that I'm looking at is this level right here, and this level being 0.0023. Now, why am I picking this? Well, it's not this exact, but if we look through the history of the chart, we can kind of see some price history around this. So here we had a low that was basically right there, right? At these couple days, price essentially went up and hit it. Again, price went up and hit it. So acted as support here, and then when the price fell below, acted as resistance, and then right here yesterday on the breakout day when it broke through the resistance, you can see it really made its big move. So because this was a former kind of big resistance, this is now an important area of support where if this was a truly big move yesterday on Tuesday, then this level shouldn't have any problem of holding strong. Along with that, we have the 10-day simple moving average, which is that blue line starting to creep up, and within the next couple of days, that line's going to be up above our level here. So that'll also be there to provide support. But from kind of the overall and what would make the chart look most healthy, it would be definitely this level holding, because if you can imagine, let's say the price pulls back and then we get a few more sideways days and then head upwards, what we would then have going on is we would have our lows down here, and then we made our move, and then our newest low would be up here. And as everybody knows, the name of the game is putting in higher lows. So obviously this low is higher than that one, and we would have the beginning of what would hopefully be a longer term uptrend. So that's why that level right there is pretty important. Now on the other side of the equation, like I mentioned at the beginning of the video, this level right here, 200-day simple moving average, is the key resistance right now. And we also have what seems to be a little fortress that the bears have made up here at 0.005. You can see back here in, I guess, early March, price came up there, bumped its head, got knocked back down. Yesterday, bumped its head, same exact spot. So if anything, I guess to simplify it, we could call this a resistance zone. So if you picture this whole area between here as red as a zone, then that would probably be the best way to picture it. So right now the 200-day is valued at 0.0041, and up here is at 0.005. So essentially the whole area of the four is just kind of a resistance area that needs to be broken through. Now yes, that might be kind of difficult, but the good news is if it can be accomplished, then a really nice move could ensue, because really there's not any other resistances until up here at this level right around the 007 level, so where James Bond's hanging out. So if you can get through the fours, the price can move up here pretty quickly and give James Bond a little battle. But one step at a time, we need to make sure that this consolidation remains healthy, and then we can kind of worry about trying to get up here to the James Bond level at 007. So that is what currently stands with the chart right now. If there are any other questions please let me know. If not, I'd encourage you to check out bullwarriorstocks.com. If you go there and sign up for the free newsletter, you'll be sent a free ebook, and with your newsletter subscription, you'll get chart setups, trade ideas, educational pieces, all sorts of things from big boards down to penny stocks. So there's a good variety, something for everybody, and it's all free. We've been making some good money together, so I'd encourage you to head to the website, sign up, and see what it's all about. One more time, this was ENTI. Thanks for listening.